NIO, a Chinese company with a market capitalization of $17.32 billion and the nickname Chinese Tesla, has piqued the interest of many investors. Today we delve deeper into NIO stock's analysis and forecast its potential price. Stay tuned.
Let me take you for a ride.
About the company's history and what it does. NIO, also known as the Chinese Tesla, is a Shanghai-based electric vehicle (EV) manufacturer founded in 2014 by Chinese entrepreneur William Li. The company was previously known as Next EV, and its premium electric vehicle brand, NIO, was launched in 2016. It has manufacturing and software centers in China, an R&D center in the United States, and design centers in Germany and the United Kingdom. With a current market capitalization of $17.32 billion, NIO is the third largest electric vehicle manufacturer. We will later in the video talk about how many manufactured cars were sold in the whole of 2022, and if they met their sales expectations later in the video. In China, NIO Incorporated designs, develops, manufactures, and sells smart electric vehicles. It has electric SUVs with seating for 5, 6, and 7 people, as well as smart electric sedans. The company also provides energy and service packages to its customers, as well as design and technology development, manufacturing of e-powertrains, battery packs, and components, and sales and after-sales management. Furthermore, it provides power solutions such as Power Home, a home charging solution, Power Swap, a battery swapping service, Power Charger, a fast charging solution, Power Mobile, a mobile charging service via charging vans, Power Map, an application that provides access to a network of public chargers and their real-time information, and One Click for Power Valet service, where it offers vehicle pickup, charging, and swapping services. Furthermore, the company offers repair, maintenance, and bodywork services via its NIO service centers and authorized third-party service centers, statutory and third-party liability insurance, as well as vehicle damage insurance via third-party insurers, courtesy vehicle services, roadside assistance, data packages, and auto financing and financial leasing services. It also provides NIO Certified, a service that inspects, evaluates, acquires, and sells used vehicles. NIO is a jack of all things. It doesn't only focus on manufacturing electric cars only, but also provide other important services to its customers and third-party businesses, which is really good. The history of NIO stock is the next topic to discuss. NIO stock was listed on the New York Stock Exchange, NYSE, in September 2018 as an initial public offering, IPO, under the ticker symbol NIO. The IPO raised $1 billion and gave the company a $6 billion valuation. Because NIO is not a US-based company, it issued American Depositary Shares, ADRs, which each represent one Class A ordinary share. We will later in the video talk about the factors affecting NIO stock, the current situation of the stock, and whether it is a good buy. Stay with us. ADRs are equity shares in non-US companies that are held by US depository banks for trading on US exchanges.
ADRs exist because many foreign companies don't want to bother with the expense and hassle of directly listing their shares on U.S. stock exchanges. Here's how ADRs work. A broker will buy the shares of foreign companies trading on their home exchanges.
Has delivered trailing returns of more than 45.14%. It has, however, experienced ups and downs. The stock rose from a flotation price of $6.26 to a record high of $66.99 on January 11, 2021. Since then, the NIO stock price has dropped by more than 75%. The Chinese government's regulatory crackdown on tech firms, as well as broader geopolitical tensions, fueled NIO's bear trend. We provide free educational and data-driven analysis of what is going on in the stocks and financial market, which can help you take your investing to the next level. To ensure that you do not miss any of these videos, please subscribe to the channel and click the bell icon to be notified whenever a new video is posted. Now on sales, NIO delivered 15,815 vehicles in December 2022, setting a new monthly delivery record and representing a 50.8% year-over-year increase. There were 6,842 premium smart electric SUVs delivered, including 4,154 ES7s and 8,973 premium smart electric sedans delivered, including 1,379 ET7s and 7,594 ET5s. NIO delivered 40,052 vehicles in the fourth quarter of 2022, an increase of 60% year-on-year and a record high quarterly delivery. NIO delivered 122,486 vehicles in total in 2022, an increase of 34% year-on-year. As of December 31, 2022, the total number of NIO vehicles delivered had reached 289,556. NIO won the 2022 China Society of Automotive Engineers Science and Technology Award on December 28, 2022 for its battery swapping technologies and applications. On December 28, 2022, NIO won the first prize of the 2022 China Society of Automotive Engineers Science and Technology Award, NIO. In a December 27 update, NIO stated that it expected to ship between 38,500 and 39,500 vehicles in the fourth quarter. While that would have been a record, it was also a decrease from a previous projection of 43,000 to 48,000 vehicles, and the stock dropped almost 12% since that day. The shift was caused by a new wave of COVID-19 in China, which disrupted suppliers and harmed consumer demand for automobiles in several Chinese cities. However, the company reported on January 1 that it made a record 15,815 deliveries in December, resulting in a total of 40,052 vehicles shipped in the fourth quarter, exceeding its lower expectations as said earlier. NIO delivered 15,815 vehicles in December 2022, a new record high monthly delivery, representing an increase of 50.8% year-over-year. NIO. Now what is next for NIO? While the stock is experiencing a significant decline and buying the dip may appear appealing, the question on investors' lips remains: is NIO stock a buy, sell, or hold? The global stock market suffered throughout 2022 as a result of macroeconomic activities such as rate hikes and high living costs. Risk assets, such as stocks and cryptocurrencies, suffer greatly during times of uncertainty and high interest rates. NIO is no exception. On Friday, January 6, 2023, the NIO stock price fell minus 4.51% from $10.86 to $10.37. The stock fluctuated 9.32% throughout the day, ranging from a low of $9.50 to a high of $10.39. The price has fallen in 7 of the last 10 days, resulting in a 10.68% drop. Despite falling prices, the volume of shares traded on the last day increased by 36 million, but the question is whether the stock will recover anytime soon. Let us examine some NIO fundamentals. NIO lags in key earnings and other fundamental metrics. It is a young and rapidly expanding company that is still looking to make a profit. NIO has an SMR rating of D on a scale from best to worst. The SMR rating is a metric that combines sales growth, profit margins, and return on equity. NIO intends to sell premium electric SUVs and cars in China. Tesla dominates that market, but Chinese EV startups are emerging as formidable rivals. For the time being, Tesla far outsells startups like NIO. NIO is reportedly planning to launch a mass-market sub-brand in 2023. NIO is expanding globally while expanding capacity in China. It leases electric vehicles in Europe and hopes to be in 25 countries by 2025. Now to our forecast. Fundamentally, Chinese EV startup NIO continues to lose money while experiencing enviable revenue growth. It is viewed as a credible Tesla rival in the coming years, with strong brand power in China, a rapidly growing market for electric vehicles. For NIO, new electric vehicles and global expansion mean more room for expansion. However, the EV wars are heating up, with BYD and Volkswagen gaining ground on Tesla and NIO in China. After taking a beating, NIO stock faces a long road to recovery. It is a promising stock with a high potential for future growth. The stock market is technically in a bear market. And while full recovery may appear impossible right now, NIO may be a good investment in the long run looking at the market cap and price, as these two factors heavily affect the risk of an asset. If you are not prepared to hold a stock for an extended period of time, don't try to hold it at all. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Warren Buffett. This was an in-depth analysis on NIO, a Tesla rival. In the following recommended video, we discuss about Tesla stock and if it's a right time to buy.